due diligence has never been more important on Wall Street and throughout the financial markets. Everyone is very familiar with investment due diligence. What's the potential return on this investment? What's the tracking error? Things like that. And operational due diligence, people understand what it means, but do they really get into operational due diligence and really using that to kind of leverage, if you will, investment due diligence? And we're going to really take a hard look, a deep dive, if you will, into operational due diligence. My guest to talk about that is Jason Scharfman, a managing partner at Corgentum Consulting. Jason, thanks for coming over.
My pleasure.
So first of all, tell me a little bit about Corgentum and what you guys do.
Sure. So we're a pure play operational due diligence firm. All we do is operational due diligence reviews on behalf of investors.
Okay.
And that's where we focus on.
Okay, so you're the right guy to talk to about this subject. So,
absolutely. Yeah.
So when I think about it, if I ask 6 people on Wall Street what they think of when they think of operational due diligence, I'll probably get 6 different answers, right?
Sure.
What's your perspective on what's your sort of definition of operational due diligence?
To start on a high level, operational due diligence can be defined as everything but will an investment make you money, almost kind of a gap filler due diligence.
Okay.
We look at a wide variety of different areas that focus on that non-investment related aspect.
Okay. I mean, can you sort of tell me, like, what are the specific areas that you look at?
Sure. And once again, that's the issue, right? Devil's in the details.
Yeah.
Putting the specifics in to this area, and you'll get many different opinions. It's certainly traditional back office operations. So the accounting function, when a fund manager trades, everything from confirmation, settlement, execution, to reconciliation at the end of the day.
Right.
Service providers, counterparty risk.
Right.
Everything from prime brokers, Lehman type risk, to administrator, auditors, legal counsel, those types of providers,
right.
Trading counterparties, legal and compliance risk. So that's a broad area, right? And then something that's very topical. Regulatory visits,
okay.
Any kind of registrations they have.
Right.
Legal documentation risk, which can include things like a fund's offering memorandum, or legal documentation they have with counterparties, such as ISDA agreements.
Right.
Business continuity, disaster recovery, technology, information security. So you can see it's really a multidisciplinary area. Valuation is a huge area lately. Yeah.
And certainly a lot of those areas are, frontline news today. I mean, you think of Knight Capital, Peregrine, Stanford you mentioned, MF Global, all those had operational issues that presumably may have been uncovered in some operational due diligence, right?
Absolutely, yeah.
Can you tell me a little bit about sort of the process that you go through, and then what's the end point, and then are there action, from there, what are the action items, so to speak?
Sure. So the process itself is very similar to investment due diligence in that you'll have interaction with a fund manager, you'll collect a series of documents, you conduct an on-site visit, and you'll go and then produce an opinion. Now, one of the things I think that differentiates Corgentum and what more people are doing is not taking the manager's word for it.
Okay.
So a manager will produce a series of documents, and they all look great, but it's easy to either go out and buy some documents for the right price, or just manufacture them, as we saw in Bayou, for example, right? Or similar type cases. So what you'll do is actually sit with the manager, and more investors are doing this, and they'll say, okay, show me actually how your systems work. Show me how you process a trade. And then working on independent confirmation, where if a manager reports a certain balance, reaching out to prime brokers and saying, can I get a sanity check and confirming what that is? Can I make sure that they actually have a relationship with this law firm, auditor? And that's not always easy to do because certain, particularly auditors, have become more lawyered up, and they make the process more difficult. But that's where the hard effort work comes in. Yeah,
sounds to me like Ronald Reagan, one of Ronald Reagan's famous lines, right? Trust but verify.
Absolutely, absolutely. That's the mantra of the operational due diligence analyst. Yeah.
So when you go through that process, what's sort of the output, and then what do you do with that, Jason?
Sure. So what Corgentum does is ultimately we give our clients an opinion, which says we believe that the operational risk is low, intermediate, or high, but it's up to the client ultimately to pull the trigger, right? We're not the allocators. And then to support that, we produce a report, which says, okay, this is our high-level summary, and these are the specifics. And how do you do that, right, in terms of giving an opinion?
Right.
You can say, okay, in our experience, we see this is good, this is bad, this accounting system works, this valuation policy is okay. But to put some meat to that, you can kind of benchmark and say, okay, we have seen 100 managers, and 75% of them don't do it that way.
Right.
why do you do it that way? And the manager might be smarter, or they could be lazy. So that's really where you have to kind of come to a qualitative and a quantitative opinion. And you can't do that without the information.
Absolutely. Yeah. So is it ultimately then, is it are you trying to help your clients kind of use that operational due diligence combined with the investment due diligence to make a more informed, ultimately make a more informed decision, and then put money where where they want to?
Exactly. You hit the nail on the head. It's all about informed decision making. So an investment can be extremely compelling, but the operational risk can be so great as to put the brakes on it. And there's enough opportunities out there that you can likely find a better choice, or you can say, you know what, we have a lot of conviction in this manager from an investment side, and their operations are great, so we're going to over-allocate potentially to that manager. And that's where it factors into the asset allocation decision as well.
Right, great. Well, I think in this environment that we're in, where alpha is sort of fleeting and it's hard to find, I would imagine that what you guys are doing at Corgentum is particularly important in allowing managers to really combine that operational piece with the investment side. So you're probably getting a good reception out there for...
Absolutely, and more investors recognizing the benefit of being an independent operational due diligence firm and not having the conflict of interest of doing investment due diligence and operational due diligence.
And certainly coming out of the crisis, one of the common themes that I've certainly heard about is this idea of investors really taking a more active role, rather than just sort of leaving it to their consultant to check all the things and do all the due diligence pieces. So that kind of, I guess you've probably got some good headwinds going in the business. So we've been joined by Jason Scharfman, a managing partner at Corgentum Consulting, really taking a deep look at operational due diligence, how to use that combined with your investment due diligence to make more informed, ultimately, investment decisions. Jason, thanks for coming by and chatting with us, and thanks for watching.